What's going on, guys? It's Justin from Push and Profit. Hope everyone's having a beautiful day today. Now, the objective of this video is to go over the MACD indicator, how to read and understand it, when to enter positions based off the MACD, when to exit positions based off the MACD, and also, just a few examples of how I use it in correlation with other indicators. So definitely stick around to the end of the video so you can see those examples as well. With that being said, guys, let's go ahead and hop into my computer screen. Now, the MACD stands for Moving Average Convergence Divergence. Now, although the name might sound crazy and complex, trust me, I'm going to go ahead and dissect this indicator to the best of my ability so that you guys could understand it very easily. So to start things off, let's go ahead and look at the MACD and let's go ahead and label each part of it, right? So the blue line is going to be the MACD line, the yellow line is going to be the signal line, and then the green and red bars are going to be the momentum indicators. Now, the higher the green bars, the more positive momentum, and the lower the red bars, the more negative momentum. So the best way to really interpret what's going on in the MACD is to really just focus on the MACD line and the signal line. For example, when we see the blue line crossing above the yellow line, that is a sign of an uptrend, and we could see if we zoom out on the stock, once we did cross over with the blue line above the yellow line, the stock did push up. And then we have the vice versa, where once the yellow line does cross over the blue line, that is a signal that you should start heading out because things are going to be heading on towards a downtrend. And you could see that obviously once this was above the blue line, there was definitely a strong downtrend. So just to reinstate what I just said, once you see the yellow signal line above the blue MACD line, things are pretty much signaling that they are headed towards a downtrend. So if you're in a long position and things are headed downwards, then you're obviously going to be losing money. And the more you hold on to it while it's going down, the more money you get to lose, which is something you don't want to do. Unless you're shorting a stock and you're making money as the stock goes down, then this would be seen as a positive, situation. However, for the most part, if you're going long and you're holding while things are going down, that's just not a good sign. You want to get out because otherwise you'd be better off just begging people on the streets for money. So something else I want to add is that you could clearly see this purple line over here. This is a positive momentum line. So if you are hovering above this positive momentum line, then you are pretty much on the solid uptrend, and if you are below this purple momentum line, then you're pretty much on the solid downtrend. And something else I want to mention is that occasionally, when stocks go up, they do tend to pull back down. So just because it touches this line doesn't mean a reversal is bound to happen. However, once you do see this line crossed over, then most likely a reversal is bound to happen. For example, if we look at the 4-hour chart of the S&P 500, we can see that we did bounce and touch this purple line. However, we continued on a uptrend. However, once we had this breakthrough below this purple line, we were on a solid downtrend, and if we zoom out, we could see that things just continue selling off. Now, when it comes to using the MACD indicator, just as I say in all my other videos as far as using an indicator, is that you don't want to solely base your trades off of one indicator, right? I use a multitude of different indicators together just because I want to make the probability of the trade being in my favor more likely. For example, when I'm trading, I'm looking at the price action, meaning I'm looking at the overall actual candles, and I'm I'm drawing my supports, my resistance lines, along with using the VWAP and also other moving averages, along with the RSI and the MACD indicator. Now, am I using all this together just so I can make my life complicated? Of course not. It's just because some indicators might show something that another indicator isn't, and or some other indicators might be a little behind. For example, in my opinion, I feel like the MACD indicator does lag a little behind other indicators, which is why I kind of use it as my last reference. For example, if we kind of look at this 5-minute chart of JP Morgan stock, we could see that overall over here we saw that it was showing on the RSI that it was overbought, but it wasn't until a little behind after the RSI where the MACD started showing that crossover, right? So even though it was fairly close, I do like to look at what's going on the charts first, then the RSI, and then the MACD. So basically the charts are telling me like, hey Justin, should I get out or should I stay in? Should I take my profits or should I cut my losses? Then the RSI is basically kind of on a higher voice telling me, okay, should you get out or should you stay in? And then basically the MACD is the final confirmation, which is screaming at me like, Justin, you should either get out or stay in. So basically it's kind of like levels to this. With the MACD being the final confirmation. Now here's another example of JP Morgan stock where we could see that, hey, the price action is actually hitting a resistance area. However, the RSI isn't telling us that it's overbought. It's saying that it's almost overbought but not entirely overbought. So there you go. One indicator is telling you that, hey, it's not extremely overbought. However, over here is telling you that it is a resistance and things can possibly head down. And then we have the MACD, which lagged a little behind even both of these, which is telling us already at this point right here that things are going down, but at that point, we should have already been out, which is why, I like to use a cross reference of different indicators, with, the most important being the price action, then the RSI and the MACD. With that being said, guys, hopefully you guys were able to understand how to use the MACD indicator in this video. If you guys did enjoy watching this video or learned anything new, then consider hitting that like button, because it really does help with the YouTube algorithm. And also, one thing I do want to mention is that when it does come to trading, you're not going to win every single day. And I like to kind of refer to this or just compare it to sports. For example, LeBron James, one of the greatest NBA players of all time, he does not win every single game. He does have some losses. Just as in the stock market, you're not going to win every single day. You're going to have some red days. However, your goal is to study as much as you can and, end up being consistent. For example, the better you become as a trader, studying and, practicing, and over time, you're going to be able to have more consistent wins, just like anyone else in any other field, such as sports, right? So with that being said, guys, definitely, continue learning. Definitely check out my other videos if you haven't done so already. And also, I do want to mention that I do have a free Facebook group called Push and Profit. I'm going to have the link in the description below, so it's definitely something you guys should check out. It's just a free Facebook group where it's just a community of other individuals interested in trading, where we all kind of engage and talk about trading ideas and topics. So definitely check that out. Again, my name is Justin from Push and Profit, and I'm out. Peace.